Good afternoon, everybody. Welcome to the Lock in Your Success Trade and Market Update for January 27th, 2013. Well, this is the last update for January. The market continues to be extremely bullish, and when we take a look at that, we can show you what we mean. This week, we had 4 out of 5 days that had significant gains, and the one day that we had a pullback was very, very minor, making for a gain of about another 15 points for the week. So that's pretty impressive. And when you take a look at the daily charts, we do have this very, very steep trend here. I did move my target for the closing price for the month. I brought it from this 850 level back up to about 890, and that's because of the continued bullishness here. If we come in here and we look at the SPX, you'll notice it traded right up to our trend line that we expected it to, right around 1500. And from here, I would expect things to start to either go sideways or back off. Possibly come down and retest this 1470 level, unless they want to keep the market going. But as of right now, we are pretty overextended. It's very likely that we're going to retest this level. If we continue to shoot higher, here's our all-time highs up here. So I don't think we're going to make that in one run. I firmly believe we're going to back off and do a 20-day moving average touch by that point. And we can either do that with sideways motion, or more likely we're going to retrace back down till we get here. And we know eventually we're probably going to end up having a 50-day moving average touch, but I don't think we're ready for that quite yet. Alright, so that's the S&P. Very bullish week. We are still, there's nothing to indicate that the trend's really slowing down. If anything, the momentum indicators are all still pretty high. I do think that we are overextended, however, and we are likely to at least start to come down towards our 20-day moving average. So we should be backing off soon. I thought it might be last week. However, it's probably more likely sometime in the next couple weeks. If you go back and do a 2-year chart on the Russell, this is very similar to the move that we had last year. We came out of November like a shotgun and kind of had this vertical move all the way to 830. That was a move of about, if you take it from here, about the 680 level or so, and you bring it to here to 830. That's around 150, 160 points. That's what the Russell runs when it has these blow-off, really huge upside moves. And if you take that over to here, and assuming this move is similar, it's a similar time of year, then you would be projecting a target here at some point. If you go 760 and you go about 150, 160 points from that, you're looking at in the 910 to 920 range. Which makes sense, and if we hold this, we will end up closing up this high. I don't know that we're going to hold at this particular time. Like I said, it turns anywhere from 120 to 160 on these big runs. We've made the 120 level. We're going to be pushing the 160 level fairly soon. So this should be just about blown out, and we should be expecting this to back off. That's why I said this month here, I'm thinking we're going to close at the 890 level. Again, if we continue higher, that may change higher, but I don't think so. I think it's more likely this is where we're going to be. If we take a look at the NASDAQ, this is the index to trade if you're market neutral. This thing here has just been completely flatlined for the last for the whole month of January. So really nice index here to be trading market neutral right now, and I wouldn't expect that to last very long, but as of right now, this is the one to trade. And if you go and look at the Dow is just absolutely on fire. This rise in the last week is even more aggressive than the Russell. So this is a very, very aggressive rise, and it looks like they're trying to push for 1400 again on this thing. And we have our all-time highs at 198.10. So we are certainly within reach of that. We have another couple bullish weeks. We may actually touch that level. Again, even with this indice, I think we are going to be backing down before we actually hit that level. So, very, very bullish market, very bullish, and there's nothing to indicate it's going to change at this point, other than the fact we're overextended and we're due for some sideways or possibly, just some healthy pullbacks. All right, let's take a look at our positions here. Actually, before we take a look at our positions, one of the things I would like to go over is what we're going to be monitoring for website trades this year. So if we take a look at this sheet here. I believe I showed you this for last year on what our profit was and everything else. And we set this up at the beginning of the year. What are we going to use for an account size? What are we going to trade with it? How much reserve are we going to have? What are we expecting to make? For this year, this is pretty much what I've decided to do for the website. Now remember, these are website trades or demonstration trades. Some of them are live, some of them are not. And they may be of varying sizes, and I do this the best I can just to give you guys examples of how the trade should work. The trades that are not live and are simulated are done real time, so and we report on them and so forth. So they are believed to be as accurate as possible. However, with live execution and so forth, they may have some differences in the results. But we try to track them as accurately as possible if they happen to be computer simulated. So this is what I'm expecting for this year. Right, I'm going to take an example account size of $400,000, and I've decided to put 50,000 planned capital for a bearish butterfly, 50,000 planned capital for an M3, 50,000 planned capital for the Rock trade, which is a new one coming out, and that's all taped, and that should be coming out in the next week or two, 3 at the latest. And then I'm also going to have what we call a V trade, which is a condor. That's very easy to manage and does very well, and that's going to be $50,000 in that. I'm going to hold half the account, $200,000 in reserve, and the reason for that is because sometimes we overlap in the bearish butterfly, and sometimes your bearish butterfly will exceed our planned capital. The Rock trade is another trade that exceeds planned capital. The M3, we trade it so that it does not exceed planned capital, so that's not an issue, and we usually don't overlap them, although we might at times. The V trade here does overlap, but it almost never hits $50,000 capital. It's usually in the 30s, so that should be sufficient for that, and we should always have plenty of reserve even despite those factors. With that, if we do what we project, and we don't know if we can make this or not, these are just targets, we will have a 95% return on our planned capital. Now, remember, our planned capital is only $200,000 in this particular case, and if we take the reserve that we're going to put into the account into consideration, then we're talking almost 50% gain on the account, which would be a really good return. Here is our actual results thus far. We've only closed January. As most of you know, it was a bad month for the January bearish butterfly. We had the market movement hasn't exactly been bearish, right? It's been very, very bullish. So it was obviously a tough month for that. The M3 trade is another trade that likes high volatility. The bearish butterfly likes high volatility, bearish choppy conditions. That's not what it got. The M3 is another high volatility trade that likes choppy conditions. It likes back and forth price movement. We did not get that. We got a consistent up move. So in a very low volatility environment. So this took a small loss for the month also. The Rock trade is a trade that likes low volatility. It does very well in low volatility. It does very well in trending markets. So for January, this actually took a profit target win, 20%, which is what I would more or less expect from it. Although it was a big enough move where I wouldn't be surprised if we took a smaller number. The V trade here also likes lower volatility. This does not like chop. It likes trending markets. Took a small gain, nowhere near 10%, but 2.7%. And I'm going to show you the trade for that this month because we're going to start monitoring it. Again, I am posting updates daily for the bearish butterfly and M3. I'm only going to be doing them for the most part. You may see something daily in one of these trades, but for the most part, I am only going to update these at the weekly update. And the reasoning for that is I'm just too darn busy. I want you to see the trades, I want to see how they work and how they function, but I'm too darn busy to be updating everything, especially this Rock trade. It does take a lot of adjustments. The V trade is very few adjustments. A lot of times this will sit all month and do nothing, so that's not a big deal. But that's my reasoning behind that. And even the bearish butterfly and the M3 I may get behind on at times, but I'll try to keep you as up to date as possible on those particular ones. All right, so that's our plan for the year. As far as the positions as they sit, this is the February M3 trade, and I've been keeping you updated with this, but I did not update you with the changes made on Friday. So we will go back, to the beginning of the day and show you what we had going on. I don't think I did anything before 11. Let me take a look. I may have, though. Oh, let me add these in here. Everything was done, yeah, after 11. So here's the position we had on initially. We had 10 850 put butterflies. We had 3 830 calls. We had 10 850 870 verticals. What I decided to do with this trade, with a continued up move that we've had, is I decided to take off half of these 850 butterflies and roll them up to 870, but 870 with 30-point wings. What I have now is I still have 10 900 puts, but now I'm short 10 870 puts. I only have 10 short 850 puts, and I have 10 long 840 puts. What this does is it takes a little bit of capital out of the trade because we're having capital issues. It also picks up our theta and changes our delta around. Now, when I did that, I also had to make some corrections up here. One of the things I did is I had to pull off two of these calls, and I had to buy 10 7 870 880 verticals, which the new position. This is the initial position here. And I wanted to move stuff closer to the market. We've been having Greeks troubles most of the week with the continued rise. You can see we're positive vega significantly. Our theta is just barely positive, and we're also having this the delta's positive, which is fine. I mean, I could have sat in this position over the weekend, but I did want to start to roll up a little closer while the premium was still there to do that. So if we come up towards the end of the day, and ironically enough, I would have been better off probably from a profit and loss standpoint had I stayed with this additional up move. But you can see now I have 5 870 30-point wing butterflies. I have 5 850 50-point wing butterflies. I have 1 830 call now. I have 10 850 880 spreads. This has cut our total capital down. It was pushing 50,000. Now it's that down to 40. This it brings our tent a little bit closer. It brings our Greeks numbers back to normal. And it's not as good on the upside if the market keeps going up. But it is better if the market sits. It's better if the market tends to drift back. If we look at our previous position on top of this, you can see that I would have to drift all the way back to 882 by the end of the month before I had too much of a potential for any kind of profit in here. I'm not confident that's going to happen with the bullishness of the market. So like I did, I punched up further. Very likely we'll come back to 890 because I've been talking about that, right? That's where I think the market's going to close out at around 890, even if it overshoots a little bit. If some time goes by, then we can hit some of our numbers up in this range. If it continues on, we are just going to probably take a scratch for February as well, or maybe a small profit, small loss. We are managing this one a little bit better than the January trade. I did have some mismanagement with that, which caused us a 3% loss. But this here is doing fine. All right, so let's close that. That is the M3 trade for February. If we look at the bearish butterfly trade, I think all the moves on this particular trade have been advertised or put on the website. So let's see here, February 13 bearish butterfly. If we come into here, this is down a little bit more than 1/3 of maximum loss. Again, this is a bearish butterfly, and it hasn't been exactly bearish market conditions. This is posting down more than I feel it should be. I think that what we're having is some mispricing in the marketplace, which is causing the profit and loss to appear worse than it should be. However, that's what it shows. One of the things I talked about last week is we're going to more or less into under 21-day expiration rules. And we did that a little bit early because of the bullishness and the extreme low volatility in the market. So this is what we have here right now. Because of those rules, we end up scaling back down to 2/3. If the market continues up, we will be scaling in up here at the 920 level. And, the trade should be fine. The only thing we're going to have is two instances we're going to have a real problem with this. One is if the market, for whatever reason, really decides to blow off to the upside and we take a really hard, fast move to the upside, we may end up taking a loss on this. The other thing is if the market doesn't hold up and crashes, we may end up taking a loss on it. Anything else, if it continues to do what it's been doing, is grind up and kind of sideways, there's a really good chance it will be fine with this trade and take a low profit target this month. So I'm still pretty confident here. So that is the February bearish butterfly. As far as the March bearish butterfly during the week, and I'm pretty sure I noted this right here, March bearish butterfly. We did do a delta theta roll where we rolled this up to a 900 butterfly. This trade is down a little bit. Again, a bearish butterfly, and we've been nothing but bullish. We started out at 880, we've rolled to 900, and this is where we sit as of now. We have an add point at 920. I don't think we're ever going to get there, but if we do get there, I'm going to happily put this second third on because this is a really good high probability trade. Like I said, I still really like it despite the low volatility. We're just so overextended, it's not likely we're going to outrun the position. And let's take a look here at the rock trade for February. I'm not sure if I updated this or not, but here is what this position looks like. I ended up adding in 3 more 920 butterflies here. So now I have 10 890s, 10 920s, because we started hitting our maximum delta. This here, like the bearish butterfly, we're having some depressed values. There's really no reason for this to be down other than pricing anomalies in the market. So as soon as that lightens up, then this should come back. So right near zero. And this has a little bit to do with the timing when we put it on. We put the position on, I think it was 29 days to expiration. Immediately we had some drop in value with the butterflies without a heck of a lot of price movement, more than normal. So that does happen sometimes. Nothing to be too concerned about, but that's why the position is down a little bit. And the last thing we have here, which is, this may be the first time you guys have seen this, I don't know, because I know I didn't report on January, but we have a V condor, which is right here. This is a trade where we put on a wide condor about 64 days to expiration, and we put a straddle in it. So it looks something like this when we put the trade on. We put this trade on, and let me just go back and go over everything. So let's just go back to, let's see, it was put on 1220. Okay, so let me close this out and go into backtester back to 1220. Okay, this one was put on 57 days to expiration. Usually we do around 64, but December, because of the expiration cycle, I was in December right up till the very end. I didn't want to, and I'm also in January at this point. I didn't want to be in February also until something closed, and December closed here on this date. From here, let's see, we didn't do anything until the 4th, which is, well, let's just go to the 2nd after that really big move. So after the really big move, here's what the position looks like. So here's the condor, here's the V or the straddle that's in there, and basically what I'm doing is as my delta increases, if it gets to unacceptable levels, I'm buying back these short strikes to flatten myself out. Here on this day I did get to an unacceptable level on the delta. I let it go to minus 100. Actually not this day, but on the 4th I let it go to minus 100. So when we go to the 4th, if we go right before or half an hour before adjustment time, with the continued up move, I'm pushing my maximum delta numbers here. So I'm going to go ahead and start buying back these shorts. If I come up into here following day, you can see I'm starting to flatten this line out as we go. buying back one of these, or actually I bought back two of these 920s. It cut me down to minus 85 delta, and we sat here in the position. So from here, if I go to the 17th, right, we bought back another one of those. On the 22nd, we bought back another one. On the 24th, we bought back another one. So I'm just going to go all the way to the 24th and show you what the position looks like on the 24th before an adjustment. So here we are, basically in the same position, although I've been buying these shorts back to deal with a delta problem we've been having. And here's what the position tends to look like right here. And I am getting a delta problem again, not right this second, but by the end of the day we did, I think, because I saw that we did something there. Yeah, so we bought another one of these back. And you can see our line's fairly flat to the upside. So from here, at some point I start having a theta problem, because if the price continues to move up, which is very rare for it to outrun this thing. Usually you don't have to do this. Just in these markets when we get these insane up moves. As the price continues up here, I start to have a theta problem because I have too many longs and I don't have any shorts. So, when that happens, we're going to do some repositioning of the outside of the condor. So, as we run up to, let's see, this 24th, there's the 25th. We're going to do a major reposition on the 25th by the end of the day. So here we come, and we'll go from, let's see, 900. I believe we must be up, otherwise I wouldn't be interested in doing that. We're up to 904. At this point here, our theta is positive again. I start buying back these things. If I bought back another 3 of these, for example, it cuts down my my delta, but my theta is starting to get really turn to garbage here. So I could stay there if I wanted to, or as an option, what I can do is I can start to reposition stuff, and I roll this back if I'm going to do that. So now we're at 920, 950, and we also a lot of times will move the call. I'm not sure exactly how I handle this. We'll see what happens when we hit the button, but we had the 830. Usually I'll roll that up also. Let's go to the next half hour. And yeah, so what we did here is we moved from, that was just today. Yeah, so this is the first major move we've done in this whole thing. So we've been in this since the 20th of December, right? And now it's the 25th of July. So we've sat in this thing for a month. Didn't do any major moves except buying back singles, right? Really simple to manage. And just because we've had just this insane up move, finally on the 25th I decide, hey, I'm getting close enough to my short strikes where I want to move this out a little bit. And I took this from the, let's see, we were at 920, I think. Yeah, from 920 to 940. And I sell more shorts again. So I go from being short 10 to being short 15, positive 15. I also took my straddle here that was 830. I brought it all the way up to 870. Brings my delta to minus 42, which is pretty neutral. Kicks my theta back up. And now I'm more or less in this position. If the market continues to creep up in this, as long as it's not too fast, we could certainly be up here. We're probably not going to hit profit target with a move this big, but we certainly could, especially if it creeps up. If it whips back on us, over time, we'll still be okay. We'll take a small profit for the month. We'll say, hey, we got whipsawed, and we'll take a small profit. However, if we continue to creep up over the next, we're up at 915 or so over the next few days, maybe 920, this may be a profit target trade. We'll see. But that is the position for the V trade as we sit. So far, so good. And I believe that's all our positions. We shall see where the market goes. Like I said, it's looking very bullish, but certainly due for some sort of a retracement. And hopefully it's not too deep of a retracement, because we're not positioned for a deep retracement here, because the market forced us up on top of the market. I will attempt to keep you updated with any changes to the Bearish Butterfly and M3 trades. The Rock trade and the V trade will probably be updated on a weekly level, although if I have time I will throw them in there. Alright, that's it for now. Have a great week, everybody, and talk to you next week.